Understanding risk is crucial in today's global economy. Why? Because it affects us all. Risk is an important factor in our everyday decisions. If we decided to hop aboard a sailing boat, we'd be taking a risk. There's a chance we'll get caught in stormy waters. And we'll sail back to these waters in a minute. And it's not so different in the world of economics. Economic risk is the potential for either positive or negative financial impacts due to factors like digitalization, innovation, interest rates, inflation, political instability, climate change. Risk, yes. Economic risk affects everyone. And when I say everyone, I mean everyone. Businesses, investors, governments, households. Banks. How could I forget banks? Banks like your own bank and central banks. I'll just refer to them as economic players from now on. Anyway, those factors I just listed, they influenced the decisions of all these players. And that can have knock-on effects on markets and economies, locally, nationally and globally. And this impacts you and your financial decisions. For example, imagine you have a small business. You've worked day and night on your latest product, and you think it's going to be a game changer. Now, imagine launching this new gadget in a country that suddenly experiences an economic boost. People generally spend more in times of economic growth, which is fantastic news for you. Demand, sales, and brand visibility soar. You end up making more money than you expected. This is the positive version of economic risk. You thought you were going to make a certain amount of money, but thanks to a change in economic conditions, you made more. On the downside, too much economic growth too soon could lead to inflation. And for you, with your small business, this would mean higher costs for materials and labor. So you see, there's always a chance of another risk on the horizon. And in this scenario, it could lead to disruptions to your business. To ensure they stay on course, economic players are constantly monitoring the various factors of economic risk. But this is no easy feat, because monitoring something that may or may not happen is far from plain sailing. Sophisticated tools from statistical models to AI-driven simulations are used to help predict economic shifts and their effects as accurately as possible. So no one can ignore or avoid risk. That goes for everyday life and economic life. But by being adaptable and forward-thinking, we can all navigate the waters of risk. See you next time. Until then, fair winds and smooth sailing.